No trading platform has so exemplified an era like Robinhood, the do-it-yourself app that enabled so many young first-timers to trade stocks cheaply and prolifically on their phones. The company married gaming with investing in a colorful package that became popular enough that in 2020 it supported a new insurgency that challenged a dusty, out-of-touch Wall Street. The resulting chaos was labeled meme investing, but was simply the championing of forgotten dogs like GameStop and AMC Entertainment. The ensuing rallies by these moribund companies had the white shoe crowd clutching its pearls over what it characterized as the unruly rabble that the democratization of stock trading had spawned. Robinhood was new, it was cutting edge, it defied the establishment. Robinhood was hip. Not so much today. The retail revolution against the Fidelitys and the BlackRocks of the investing world took place during the longest, most sustained bull market in history. Now Robinhood users and shareholders are acting as if those good times are over. The S&P 500 is down more than 10% from its all-time high, a punch that Robinhood has taken directly in the stomach. Shares are down 43% so far this year and 70% since it went public in 2021. The number of monthly active users fell 10% and the company says it's slashing 9% of its employees. Adding insult to injury, company founders Vlad, Tenev and Baiju Bhatt are no longer billionaires, according to Forbes estimates. We face a challenging macro environment, one most of our customers have never experienced in their lifetimes, Tenev told investors in earnings-related call Thursday. He's right. In fact, Robinhood didn't exist during the last bear market. Since the app launched in 2012, the S&P 500 is up in the neighborhood of 240%, despite this year's pullback, and it's risen more than fivefold since its nadir in March 2009. In other words, it's been nearly impossible not to make money in equities over the last decade plus. That's thanks in part to the Federal Reserve's ultra-accommodative monetary policy put in place to combat the Great Recession. The era of cheap money sent corporate profits and stocks soaring, and DIY investors grabbed hold and went along for the ride. Now many of them are realizing stock investing isn't as exciting without the joy of winning. The reality is that self-directed investing often feels fun and easy when markets are just going up and up, says Michael Kitces, head of planning strategy at Buckingham Wealth Partners. It takes a bear market and the experience of losses for us to start to distinguish between our own luck and skill. That includes Allen Fok, a 31-year-old manager at a software company, who was a teenager when markets hit their lows. He's been trading on Robinhood since June 2020 and says he's seen fellow DIY traders' accounts blow up since January.